Hi everyone. So in smart money concept, we need to first understand what is BOS, which is break of structure, and CHOCH, which is change of character. So I'm showing you a sample here. Let's say we have this white line is the price of our stock. We can clearly see that this is a low, then there's a high, then there is another low, and a second high. So the formation is higher high, higher low. That means the market is going up slowly. And when the first high is broken, that means when this level gets broken, this is where we say that the break of structure or the BOS has happened. And this is essentially the BOS. So whenever we find a higher high, higher low from same thing which we have already discussed in Dow theory also, this is called BOS in smart money concept. Similarly, you can see that we have another BOS forming here because we have higher low. So this low is higher than the previous low, and higher high. This high is higher than the previous high. So you can keep finding that you're getting BOS, and when we keep finding BOS one after the other, that means we are clearly in an uptrend. We are clearly in an uptrend, and we can see also that this is a clear uptrend. Similarly, we can find BOS when the market is coming down. That means when the market is in the downtrend. And in that case, what I'm looking for is lower low, lower highs. So let's take an example. This is a high. This is the second high. And then I have two lows. So this low is lower than the previous low, and this high is lower than the previous high. So lower low, lower highs, and then also we can find a break of structure happening, and you can find a BOS happening here. So when this low gets broken, that is when we will say that yes, BOS has happened. So whenever the market is trending up, we will have a BOS, and whenever the market is trending down, we will have a BOS as well. Now, when can we initiate an entry? We can initiate an entry when the BOS is broken. So then at this point of time, this is probably a good time to take an entry on an upward direction because we are in an uptrend. Similarly, if we have missed this entry, we can probably go for another entry here, or if you want, we can go for a pyramiding entry here. And we can again keep adding more to our quantities when we are forming a BOS. When the BOS is happening on the uptrend, we will buy it, and when the BOS is forming on the downtrend, we will sell it. But now I can also show you there is something called a CHOCH, which is mentioned here. This basically shows change of character. Basically, this is where the market is reversing. Okay, so let me just try to clean everything. So this is where you will see that I'm showing you CHOCH now. So market was clearly in an uptrend. Market was clearly in an uptrend, but this is where market came down. So started to come down. So it broke the previous low. It broke the previous low, right? But I will not be going for an entry here. I will not be going for a selling entry here because a lot of time what I've noticed that when the CHOCH comes, there might be just a fake entry and it might go and reverse and go back again. So I will always wait for my BOS to happen because at this point of time, my BOS has actually not happened, right? My BOS has actually not happened. So I will not go for an entry. I will wait for my BOS to happen and I will actually initiate my entry here. So CHOCH basically is telling me that yes, my uptrend is exhausted. So I can probably, if I was already in the buying trend, maybe I can go for an exit here. So that is good. I can go for an exit here, but I will not initiate a new entry. I will wait for my BOS to come, and that is when I will be initiating a new entry, which will be a selling entry now. So this is just the starting of BOS and CHOCH, which is part of the SMC, the smart money concept, and I will be talking about more ideas in the next video. The next concept that we are going to talk about is called the order block. So as we know, in the stock market, there are a lot of big players, institutions, mutual funds, hedge funds, a lot of banks, right? So which do trading in bulk quantity, and they usually create what is called an order block. So let me talk about that a little. So see what is happening here. Market was clearly going up, and you can see here that all the candles were more or less green candles, very small doji candles, but more or less big green candles, and the market was clearly going up. But suddenly suddenly there was this big red candle, right? Suddenly there was a big red candle. So when the market was going up, sudden movement on the downside. So when you see something like this, that is when we can say that there is some kind of an order block which is here. So there are some institutions which are moving the market on the downside from here, from this level. We can say either this level, or we can do it based on the closing side. So somewhere here. So this is where there was a big order block, because as soon as the market came here, which was completely bullish trend, suddenly it started to come down, right? Similarly, we can find the order block on the downside. So you can see here clearly the market was coming down. All the candles were red candles. That means pure downward trend. And suddenly there was a big green candle and market reversed. So there is probably an order block which is placed somewhere here. So this is how we find our order blocks. Now, what are these order blocks? Basically, a lot of times these hedge funds, they want to take an entry or go for an exit at a predefined level that they feel is an important level, and they will keep a lot of open orders there. So when there are open orders, they will get triggered. So let's say if they have a lot of selling orders at the top here, they will sell it here, sell at the high, and when the market has come down, they will buy at the low. And as I said, this is usually done by big players like institutions. A lot of time what you would notice that these order blocks are also the same places where you will create your support and resistances. So you can see here at the top we have a double top being formed, so first high and second high. So therefore this was a strong resistance zone. And similarly, you can see there is a support happening here because of one bottom and a second bottom. So this we can say is a support zone also. So a lot of times there is an overlap between order blocks and support and resistance zone. But the main thing to figure out how to calculate the order block is when there is a clean uptrend. That means all the candles are of the same color and sudden down movement, or there is a complete downtrend which all the candles of the same color and sudden up movement. So those are the order blocks, and we would be requiring these order blocks also when we go ahead and talk about the smart money concept strategy. So I've already completed two concepts here, the BOS, CHOCH, as well as order blocks. Now I will be talking about what is a fair value candle. So let's talk about the third concept now, which is called the fair value candle. So essentially what we're looking for is we are looking for a big candle. So I'm showing you Tata Steel on a 30-minute time frame, and you can clearly see there is a big candle forming here, right? There's a big candle forming here, and when I use the word big, that means it has to be relatively a very big candle. So let's say bigger than last 20, 30, 40 candles. Bigger the candle, better that value will be. And so first condition, obviously the candle has to be big. The second condition is that the previous candle, so the previous candle's low in this case, because we have a red candle, so previous candle's low and the next candle's high should not touch. So when that happens, essentially what is happening is we can say that there was a quick movement during this time, and there is a space, there's a space formed here, okay. So what we have to do is we can find the fair value by marking the low of the candle, the low of the previous candle, and by marking the high of the next candle. So this space in the middle is the fair value space, and usually what you will notice that if the market comes back to the similar space, there can be a good downward direction. Why downward? Because we have a red fair value. So because there is a red candle, if the market comes back to the same space, so you can see here, if I extend this, you can see that when it came back to this level, it again started to fall down. Right? So this is called the fair value. Similarly, we can see another fair value candle being formed here. We have another big red candle. So again, I can mark the low of the previous candle, and I can mark the high of the next candle. So this becomes my fair value space. And again, you will see that once the market came down in this zone, it started to come down right from the zone again. It touched that level and came down again. So the next very important concept is the fair value concept, because A lot of times we can get a really good entry in smart money concept if we know what is our levels based on the fair value of that particular stock, and we can go for a trade once the market comes back to that same zone. So let's now talk about the strategy, how we're going to use all the concepts that we have discussed so far. So the first step is obviously to find out what are our order blocks. So we can see that the market was going up here. The market was clearly going up with almost all big green candles, and suddenly from this point of time, market started to came down. That means there can be a selling order block here. So I'm going to first mark my selling order block here, and then similarly I'll try to mark my buying order block. So we can see that the market was coming down with big red candles, and suddenly at this point of time market reversed. So we can say that there is a buying order block at this point of time. So we have made our order blocks, but now when do we take an entry? So let's check that. Before we take the entry, we have to find out whether we are getting the break of structure or not. So we can see that the market was going up, then it reversed, and then it went up. That means there was a break of structure here. But when there was a break of structure, it was close to the order block. So this is probably not the great time to take an entry, right? Similarly, when it came down, it went up again, and now there's a change of character. There is a CHOCH here. So this is a BOS right here. This is change of character. And usually I don't like to take an entry on the change of character, because this is the time when the market is reversing, but it's high risk high reward essentially. So I would probably not take an entry here, but I found out that yes, the market is now in a downward direction because the change of character has happened. So let me mark that also. So this is BOS happening here, and then we have the change of character happening here. Now I'm looking for a big red candle because the change of character has happened. So I'm looking for a big red candle which would act as my fair value candle. And we can see that I have got a good candle here, a big red candle which is here. So what I'm going to do is I'm actually going to mark the previous candle high, which is this, which is almost similar to my order block, and the next candle, previous candle low and the next candle high. So these becomes my important levels. Now I know that if the market reverses and comes back to this zone, in the middle, there can be a good selling pressure and I can take an entry, right? So what I can do is I can either take an entry right at the order block. So once it touches the order block, I can go for a selling entry here. So this can be my entry. So this is where I'm actually going to take the selling entry. So this point becomes my entry. Let me write it down here, and I'm selling it here. And once I have taken my selling entry, I'll have to put a stop loss, and I can put a stop loss at the previous swing, which is here. So this becomes my stop loss, and I can keep the target as the next order block, which is somewhere here. So let's see if my triggers or not. And yes, you can see that the target was triggered here. The order block got triggered, and we can very well see that from here the market will go up again. Because this is a buying order block. So this becomes my target. So this is how I would have taken the trades. Using the smart money concept. So let me quickly summarize what I've just shown you. I started by making my order blocks. So this was the upper order block, this was the bottom order block. Then I was trying to get an entry based on the BOS, but since there was no BOS in the middle, I couldn't get the entry. BOS happened at the order block only. So I will not take the entry at the order block, against the order block. Then the CHOCH happened. That means the market can come down. And this is the time that I'm looking for a fair value candle. This was my red fair value candle. I marked my zones, and once the market reversed, I would take the entry. If it touches the order block, I will go at the low of that candle with the target as the order block here and the stop loss as my CHOCH swing. And you can see it was a very good trade and almost a 1:4 kind of a trade. So that's the beauty of taking such trades. This SMC concept works very well. So I hope you enjoyed this video. Thank you very much.